Infinite banking is not just about controlling the banking function in your life, it's also controlling the tax advantages and using them the way that the wealthy have quietly for generations. This is a system that you can implement today.
We're back, and it's a big day. We're going to talk about something that most people overlook when it comes to the infinite banking concept. When you first hear about it, your mind may jump to control, to cash flow, to the access to the capital for the things that you want in your life and that you want to finance. And yes, that is a huge part of it. But what rarely gets talked about clearly are the tax advantages. And I know Jeremy's so excited about this one. So let me just say the tax advantages aren't just the icing on the cake, they're what makes the infinite banking system such a game changing process. So, Jeremy, welcome, man. How are you doing?
I'm doing well. I love this topic. I know it sounds weird to talk about taxes and to love to talk about taxes, but if we remember my origin story, I found infinite banking because I got tired of giving Uncle Sam so much of my hard-earned money. So this was kind of the journey that led me into infinite banking was trying to figure out how to keep more of my wealth. And then I learned through infinite banking I could multiply my wealth, which was awesome. So I'm really excited about this episode. Let's get into it.
Yeah, and we're going to talk about all those things. We're going to talk about how you're going to unlock the tax deferred growth, the tax free access, the tax free wealth, the multiplication that you just mentioned. And yes, we all make a lot of money in America, right? Jeremy, we all make so much money compared to the rest of the world. But how much money are we keeping? Like, how many of you aren't paying enough in taxes? Anybody? Please send us a message, wealthwisebanking.com, or in the comments below if you're not paying enough in your taxes, because I want to talk to you. Because that's why one of the big things, like Jeremy said, his origin story is he likes the IRS tax code. He likes the 7,700 pages. I don't know why. I don't know why, but I guess when you understand that is nothing more than a playbook and a rule book that the wealthy are playing, I guess that would drive your curiosity to know what's in those 7,700 pages, right?
Yeah,
So let's,
and you don't have to sit down and read it. Fortunately, you just go to experts who know about it. Hence why we had Danielle Michelle on during the April webinar, where she's just literally talked about tax strategy and tax architecture. Today, we're going to talk about the benefits, like the tax benefits of banking with permanent life insurance and how you can end up creating, keeping, and multiplying more of your wealth over time.
and Jeremy, that and buried in those 7,700 pages is what we're talking about today. You know, the most powerful wealth building secret that is what has created the Rockefellers, which we talked about before, for 7 generations. It is something the wealthy have been using as the multiplier. And we're just teaching you how to use it during your lifetime so you can live your legacy now while you have all these advantages.
Yeah, it gets back to what we've talked a lot about with between borrowers and builders, right? Borrowers go out there and they play the tax game that they were told to play, while builders, they don't ask for permission. They go out there and they build their wealth. Again, you don't have to be an expert in the tax code. I'm not asking you to go read the tax books before bed. That's not what we're saying that you should go do. But you need to understand the framework. You need to understand a little bit about the rules of the game and then go to the experts to help you implement the strategy. And that's what we do is we help you build the strategy that fits your unique life.
That's it. And on that strategy, like you just brought up an awesome point, the kicker, right? You have to design the policy correctly. You know, one of the things I learned early on, Jeremy, when you talk about if it is incorrectly designed, what happens to it? It becomes a mech. What's a mech, Jason? Good question. It's a modified endowment contract. And you start losing some of the tax advantages that really mattered. So the structure, having someone that can specially engineer these things correctly, that is a certain, so if it's not Jeremy and it's not myself, you want to make sure you're working with someone that really understands this. And I like calling the mech the maximum efficient contract. How do you like that, Jeremy? Should we try that on for a little bit?
Yeah, I mean, we can try it. I don't think people, It's another insurance language. If you really want to like strip it raw, it just means your policy is going to default, right? Your policy is going to go into default. All that tax-free growth that you're getting, all the tax advantage growth will be taxable if your policy mechs. And once a mech, it's always a mech.
Yeah, it doesn't come back. The death benefit is still tax free, but everything, all the other advantages, the tax advantage part of it is no longer an advantage.
Yeah. So you do need to work with someone who knows how to design around mechs, right? You don't have to figure it out yourself. That's what Jason and I are here for.
And let's talk something. Let's talk a little bit more about the tax deferred growth. I mean, you love this stuff, so let's
Oh
jump
man, I
in.
love it.
Yeah, jump into the tax deferred growth inside the infinite banking policy. Let's talk about how that looks for someone that's running a business, entrepreneurs like our builders who are listening to.
Yeah. So whether or not you have a W-2 income or you're an entrepreneur, business owner, you're going to have a capital gain. You're going to have some sort of income every single year that you're going to have to pay taxes on, unless you pay taxes in the front end and put it into a qualified account that you're going to limit access to your 59 and a half. All right. So those are your IRAs, your 401ks, your qualified plans. You can end up paying taxes on the seed up front and then run it through a banking system, get all the growth tax free or tax deferred, really, access tax free. And then you can end up using that same pool of money to go and multiply it through investments, which is exactly what I do. While at the same time, it's still growing inside of the policy year over year, guaranteed. It doesn't matter that you have an outstanding loan that you're using to multiply your wealth inside of real estate. As an example, that's how I use mine. If you want to put it into a hedge fund, you want to put it in the crypto, it's your choice, it's your banking system. But what I like about it is even though I have it out multiplying into another asset that's going to what? Create additional cash flow inside of my policy, inside of my banking system, I'm still able to grow it and access it tax free as though I never took it out. That's the power of controlling the banking system.
And let's break that down simpler. So what Jeremy just said is he wants to give your dollar, and I want to know if you all want the same thing. He wants to give your dollar three jobs. He wants your dollar saving and growing uninterrupted and compounding at a guaranteed rate that's tax free. He wants you using that same dollar like he does in the middle and spending it and putting it somewhere where you're going to make a spread with an investment from the tax free loan that you've taken out from or against your cash value. So you're saving it, you're spending it, and you're multiplying it with the guaranteed legacy, which for all the fathers listening like myself, all the people who are the producer, the builder in their family, that protection piece lets you go out and do what you need to do, knowing that God forbid something happen, you're taken care of.
Yeah, and you can access all that cash value. There's no taxable event when you do so, right? Because, like you said, technically it's a loan. So you can access that capital tax free anytime, and you can use it for anything. I talked to you about how I use it for real estate, but if you want to use it for business as emergency capital in case something happens, not if, but when something happens, lifestyle expenses, right?
Mm.
I know, Jason, I see you smiling over there because you want to get into the whole quote of what's the one guarantee in life. Go, Jason. What is it, buddy?
The one guarantee in life, and no, it's not death. No, it's not taxes. It is change, brother. So the
Yeah.
way you just set that up was beautiful because you guys know that that is. I think about it all the time. It's really powerful. You know, it's really powerful that we as a species, yeah, that's weird to say, but we as a species haven't evolved enough to think long term. We don't yet think in decades, in centuries. And what this whole system does, it asks you immediately to make that one change. The big shift in the paradigm is you start thinking in decades rather than in hours and days and getting instant gratification. So that means, Jeremy, like to your point of the one thing that is going to happen, good or bad, is change. So if you have a system, like brother, if you have a system that you're building up the opportunity fund and you're putting money in there intentionally, you're paying yourself first, which is more love than most Americans are showing themselves. And then stuff happens. You just shared before the show about all of the things going on with all your real estate development projects, which are your investments from your system. But Jeremy, how does it feel? I know it's stressful, but how does it feel when you know that, hey, you knew that change was going to come?
Well, that's why I built, I have a policy. One policy is literally the maintenance and capital expenditures. So, for those who don't understand what that means in real estate, it's my emergency savings for my investments, right? So, the asset being real estate, it will have problems, whether it's AC. Like today, it was washer and dryer went out, and another one was an AC unit from last week. So, together, collectively, that was about $2,000 spent today to fix it. Maintenance and CapEx account. Where am I going to warehouse my money? I'm not going to put it into a traditional bank that earns 0.01%, has no legacy value. And if I use it, I don't get the three benefits that Jason alluded to. Instead, I'm going to run it through my family bank, through my own personal banking system. I'm going to get those three benefits, use it to end up paying down all these, the AC and the washer and dryer. And guess how I'm going to replenish it? Well, tenant rents, right? I'm not going to be a slumlord. The property is going to be brought back up to proper standard. I'm going to be able to maintain the tenant rents. The tenants are going to repay the policy loans. So I've created one asset, the asset being my banking policy, that then I turn around and leverage for cash flowing assets that do what? The asset I like is real estate. Why? It's a tax play. Are you starting to get it? It's a tax play to help me keep more of my other income that I generate through flying and my other tenant income. And that cash flow goes back into the policy. I rinse and repeat. I rinse and repeat. So I'm using one tax advantage asset, my banking system, to purchase tax advantage assets that create cash flow that fund my banking system. And I'm just circling the wealth over and over again, cutting out Uncle Sam, cutting out Fannie Mae, cutting out Freddie Mac. Like I don't need them in my banking system.
Yeah, and you don't need all of those mailers, all those flyers, all the things. When something happens to you, you're not going, oh, yeah, this is a good idea. Let's take out the 0% credit card to pay for this washer and dryer or, whatever it is that does break it.
Exactly. I'm not going to the debt.
Yeah, you're not going to the debt side of things because you're controlling it by building that emergency fund. And you're like you said, if you're building that emergency fund, which yes, we should all have it, whether it's 3 months or 6 months, or you're running a business like Jeremy and you keep something separate because change will come. But why store it, even if it's a high yield? Why store it someplace where you're going to get taxed on it?
Mhm.
Or if you're not even getting a high yield, say you're getting 0.01, 0.03, 0.07. When you borrow the money, what happens? You interrupt the compounding.
Opportunity cost.
There's opportunity costs there. And this is kind of some of the hidden costs and the hidden things that people aren't considering when they're not being more proactive from using a system like this, a system that gives them the tax advantages.
Yeah. And a lot of folks will say, well, I have tax advantage accounts. I have a 401k or I have an IRA. Is it your account if you can't access it without penalties and restrictions? Or is it an account owned by the government? Just simple question, right? Is it your system when there's regulations and penalties imposed upon you for your qualified accounts? Or is it Uncle Sam's system?
I love Uncle Sam's system and talking about it with folks, Jeremy. I always ask him, I always tell a quick story and play along with me, Jeremy. Play along, folks in the car listening. It'll be super quick, but think about it this way: when you're locking the money up, right, in Uncle Sam's plan because you're getting some kind of match or your employer benefits, is that a bad thing? No. Is it the worst thing? No. But let's play the game. So Jeremy, you and I are going to be partners like we are already, but we're going to form another partnership, okay?
Okay.
And in the partnership, we're going to be 50-50 partners because we're good friends, we're both October babies. We're going to be brothers on this journey too, but in this particular partnership, you Jeremy are going to supply all the capital to build our business, okay? That's number 1. You cool with that?
Do I get to set the terms?
Well, wait. That's just term number 1. Like, I see you're already asking questions. I'm guiding this partnership because I thought of it. So the next part of our partnership is now that you've agreed to provide all of the seed money to grow the business, and Jeremy, you know me, man, I'm chill. I am going to be not telling you what to do. I'm not going to bother you. I'm going to let you run the business like you want to. But here's the thing, man. When you start building that up and you need it because of that change that did happen, then guess what? I'm going to put some rules on it. And I'm going to tell you how much of the money you can access, if you'll have to pay a penalty, by when, and then by when you'll have to use the money. Cool so far? That's the first two rules. You supply all the capital, I make all the rules. Are you good with that?
I supply the capital. I
Yeah.
don't get to set the terms
Yeah.
and I don't get to make any rules. So right now I'm
Yeah.
just a money partner with no say in the game.
It's so great, isn't it? And then finally, uh, what I'm going to do for you, one time offer only, you got to take it while you can get it, you know, is now because I've been hands off and you've taken that little seed and you've nurtured into a great big harvest. Now, Jeremy, and I really appreciate you playing along and everyone listening playing along. Now, when you need the money, guess what? Guess what? When you need the money, I'm
Now I get
gonna
to keep it.
no, I'm gonna come back in and I might be a little hungover and I'm gonna walk over to you and I'm gonna bump you. Yo, Jeremy, bro, you did such an incredible job. Woo! I'm gonna need 34.5%.
So you're just going to be an absentee partner and I got to pay you no matter what.
Yeah, but it's gonna be great. Do you want to be
Yeah, for
partners?
you. Yeah, it's going to be great for you.
So everyone listening, yes, that's something I do on a lot of calls with people, and some of the reactions I get are priceless. I should probably film it because it's a lot of fun. But that right there is, and there's a great book. It's called Unshackled. It's written by, I don't know if he's a certified practitioner or not, Jeremy, but he's basically someone who's dug so deep into the 401k actual legalities, and what he says is that it wouldn't even hold up in a civil court of law. And then you have all the variables on top of that. So all we're saying, let's bring it full circle, is rather than trying to access and leverage your 401k for investments, for emergencies, for change and paying penalties, why not build a system that you control?
Yeah. I mean, it's a lot better system. And you know what's here's the cool thing. We're talking about all the living benefits of the policy, right? By using a system that predates the IRS tax code, which by the way, if you didn't understand the whole life insurance, it predates the 1913 IRS tax code. Hence why you get all these tax benefits, why this is grandfathered into the system that we get to know, love, and use today. The one system that a lot of folks talk about when it comes to life insurance is what? It's death benefit. I mean, we're talking about living benefits. We've just been going on and on right now for the living benefits of the tax benefits. But here's the great thing. If I'm going to go out and build all this wealth, if I'm going to go out and create all these investments, all these other opportunities, I want to be able to enjoy them, right, Jason? I want to
Yes.
enjoy it. But if I also have an understanding that maybe I want to leave something to my family, to my beneficiaries, to my trust, that's where the death benefit comes in, the legacy value that also passes tax free. So I get to enjoy the full fruits of my labor, all of my life's work, spend all of my investments to zero, and still have a guaranteed legacy value through the death benefit that I can pass on to my estate.
Rewind there again. Did you say you're going to spend all of the money to zero? Is that what you said?
I can. It's my money, and I get the opportunity to do so.
Well, but wait. How are you using this all tax free and doing all these things, and you're still leaving a tax free legacy that's covering all the state potential problems and leaving that for your loved ones?
Yeah. Well, that's the system that we created, though. And
Huh.
by leveraging whole life insurance to create that legacy value, that's how you're actually passing on generational wealth. It's what John D. Rockefeller did. He ended up going Standard Oil, it was broken up. Well, what am I going to do? I'm going to create, keep, and multiply. And one of the ways that he passed on a tax free legacy value to perpetuate that generational wealth, as you said, 7 generations and counting, it's through the legacy value of the policy itself and ensuring that it goes back to the trust structure. Now, we can do another podcast on trust and family constitutions. We've had a previous one for the 4th of July on the family constitution. But if you really want to look into how that's done, it's not that hard, really. It's just naming the beneficiary, the trust. That's it.
And like you said, it gives you the freedom. I was being fun, but it gives you the freedom to spend it all. And you've worked your whole life. you've saved, you've invested, you've multiplied your money. But now, like you said, because you've been proactive, because you've been actively paying yourself, not this partnership that Jeremy and I tried to create. I tried, Jeremy. I thought it was
No,
going
that was junk. That
to
was a terrible partnership.
Well, you win some, you lose some. Like we have some other amazing things happening with WealthWise Banking and other things. But with that, like I thought I had a good shot. I've charmed, my way to having a show with you. So you get to build up that opportunity fund. You get to love yourself a little bit more. You can spend them down to zero. You live the lifestyle you want because you're controlling it, and you pass on that tax-free estate through the death benefit. And when you do it properly, guess what? This will be another episode, but it stays out of probate. It stays out of the
Mhm.
public eye when you're doing it right. You're not like, go look up Prince and what happened with his estate. There's so many famous people that didn't just take cue, I guess, or take the clues that was left by other wealthy families of how to really pass on the process, the system, the tax-free benefit. And that's the freedom, the flexibility. That's why this is such a legacy tool and not just a savings tool. We don't spend a lot of time there, but compared to other accounts, look how it stacks up, right?
Yeah, I mean, the growth, it's not reported. The loans, they're not taxable. The death benefit, it's income tax free and bypasses probate. For those of you who don't understand what is probate, well, it's a very public process. It can last a very long time. Typically, the attorney's going to come in, they're going to take a little portion of the estate. There's going to be estate taxes. There's going to be a lot going on. And for our high net worth people, well, it was the minimums were just increased, but for if you're married, I think it's $30 million. Anything over and above, expect to pay 40% to Uncle Sam. All
Wow.
right. If you're single, anything over and above 15 million. Well, when you start taking back the banking function in your life, hitting a $15 million estate really isn't going to be that hard. I know for some people it may seem out of reach, but for a kid who came from a parent out of bankruptcy, who grew up eating McDonald's, living in this country, if you want it, if you want to create a $15 million estate, you can. We live in the greatest country in the world. Now, granted, Uncle Sam, to Jason's point, isn't the best business partner for you, but that's why we take back the banking function in our life.
Yeah, and we pick on Uncle Sam a lot, but we do live in the greatest country in the greatest time in our history. And so even though if you look at that 7,700 page tax code as the manual, and you think about some of it, it's like Nelson Nash talked about in Becoming Your Own Banker. He said, hey, on page 85, points to consider, he talks about, hey, if you think that Uncle Sam actually cares about you, like they create the problem, the onerous taxation, I think is a word he used, onerous taxation, high taxation, and they tax you on more things. And then they come up with solutions. And the solutions are the things that are named after the tax code, the 401k, the 529. These are the traditional vehicles that folks, you can use them, but you're limiting yourself, you're limiting the access, you have restrictions. They can be tax free when you follow the rules, but there's penalties when something goes differently, change happens. Maybe your kid doesn't go to college, you don't follow the traditional route, and all of a sudden you have to pay taxes. Happened in my life, happened with my
Hmm.
oldest son. So just really the really plan is how can we simplify everything so you're controlling everything and using one system to do all of the things we're talking that you want to do.
Yeah, infinite banking is not just about controlling the banking function in your life. It's also controlling the tax advantages and using them the way that the wealthy have quietly for generations. This is a system that you can implement today. It's not going to take a lot of time. You just pick up the phone, call Jason, call Jeremy, start with a strategy call. That's where I would start. I would start with the strategy call and not say, hey, I can't, but ask, how can I? If you
Mm.
start asking that question, how can I? That's going to open far more many doors than if you start eliminating without even trying.
Jeremy, I love bringing that mindset piece of things in here because it's very much, Henry Ford said it. I say it every day, at least 3 or 4 times. You either think you can or you think you can't. And either way, you're going to be right. Either way,
Mm,
you're going to be right. And so, if you want to know how you can leverage this tax advantage system, the growth's not reported, the loans are not taxable, the death benefit is income tax free, it bypasses probate. This is how you keep more of the money in your family. This is
mm,
how you keep it from going to our favorite uncle. We don't want Sammy involved in all this. And Nelson said, you finance everything you buy. You either pay interest to someone else or you give up the interest you could have earned. He's pointing us towards that ownership. That infinite banking isn't just about that banking function. It's about owning the tax advantages that the wealthy have been quietly using. We've mentioned it several times for generations.
absolutely. Yeah. So as we start to wrap things up here, we just want to remind you, guess what, folks, you're already in banking. All right.
You're just not the banker yet. So, as always, Jeremy and I aren't confused. You listening to this, bring more people, invite them, be that blessing to them. But we are not confused that you're giving us your most valuable asset, your energy, your time, your focus, your ears, your listening, your mind. And that is the biggest blessing to either of us, that we can share what's changed factually, change both of our lives beyond anything that I could imagine before I learned about it. So, Jeremy, always blessed to be here with you, brother. Any final words? I know we wrapped it up with the banking part, but any final words on your mind?
No, no, I'm just glad that we can talk about, the little one of the wealth eaters, right? Taxes. So maybe in a future episode, we talk about the hidden fees, how it's easier to keep more rather than risk your wealth to try and earn a higher rate of return. The net effect of keeping more of what you earn is the same thing as going out and risking it to try to earn a higher rate of return. Your bank
Mm,
account has more money in either case. Maybe we look at that as a future episode. If you guys are listening, if there's things that you are questioning, if you heard something in this episode that maybe didn't make sense or you want us to elaborate more, write it, right? We're on YouTube. You can put comments in there. You can email Jason or myself. If there are things you want us to discuss, reach out, let us know.
perfect, Jeremy. And like I said earlier, unless you don't think you're paying enough in taxes, let us know that too, because we're going to look closer at how you can have some of these advantages. So, thank you, everyone. Be blessed. Until next time.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.